The S&P 500 tracking for its first positive month in 4, climbing 6% after falling 15 from its all-time high. So what does history tell us about where the market could go next after this fast rally? Bespoke Investment Group co-founder Paul Hickey and CNBC senior markets commentator Mike Santoli back with us. Mike, sort of a curious hour of earnings. Salesforce now maybe up about 1% after coming way off the highs. NVIDIA has continued to sort of maintain its relatively high levels here, but the S&P hasn't necessarily over the past few quarters been swung by NVIDIA, right?
No, it hasn't acted as a particular catalyst, inflection point. In fact, in a few cases, what really happened was the market was sort of held in place until NVIDIA cleared through, and then it sort of proceeded along its path. And for the last 3 quarters, it just so happens that that was either in plateauing after a rally or initiating a little bit of a correction. So I'm not sure there's going to be that tight a link. I do think what you generally are watching here is, like, it's the tail end of earnings season. I do think that most stocks are down off their highs, so there's the room for some relief in there. But, you know, there's just a hesitancy to extrapolate whatever we just heard in the last quarter out for the rest of the year. So that, to me, is a little bit of the opposing currents that the overall market is caught in as well.
So, Paul, how much do you tune out policy as an investor and say, hey, if not for that stuff, here's how these companies would be doing? Or how much do you really hone in on it and think about what the long-term implications of these fundamental shifts will be?
So, I mean, I think as far as the policy is concerned, you want to try and tune it out. You can't tune it out fully. But what we've seen is that, the initial announcements always get walked back a little bit, at least. So the bark is worse than the bite, so to speak. So I think in that respect, you can try and ignore part of it. The market overall, though, I think NVIDIA here higher is, caps off what has been an unmitigated successful earnings season. We've had, you look at where expectations were coming into the period versus what we had coming out. Just as many companies raised guidance as lowered guidance. No one thought that was even remotely possible in early April. So things have been good. NVIDIA has been good so far. And you never want the market, as Mike was saying, to be, reliant on one stock for the gains. So the fact that it isn't the bellwether for the market is an encouraging sign too. And then, just going back to what you were talking about in the intro, when you have the market, when you've seen a 15% pullback, and then you rally back within 3% of that high, like we did last week, you were at a new high 13 out of 15 times within the next 2 months, and only once did it take 6 months. So wow. The forward return 6 months later, you were higher every time. What's unique about this period is that it only took 62 trading days to do that almost round trip. The only period even less than 100 days was 1998. And there's a lot of parallels between the market performance now and the market performance in the 1998 period.
Okay.
And you can substitute headlines, AI versus internet. They're interchangeable, and you wouldn't know which period they were in.